Welcome to Accounting Corner. Let's explore accounting equation. Subscribe to our channel for more videos. Any business performing business activities owns properties which are used to perform these activities. These properties can be material, immaterial, or monetary. They are called assets. In order to acquire the assets, business needs to get financing. Financing can be provided by the owners of the business. This financing represents equity. Financing to the business can be provided by creditors. Such financing is called liabilities. Both these categories represent rights for the owners and creditors respectively claiming back their money.
While comparing liabilities and equity, here is the main difference. Equity does not have maturity date. These are the financial means provided by the owners, investors, who invest money into the business for an indefinite period of time. They expect getting dividends, which is a remuneration for the provision of the financing means to the business. Liabilities is the type of financing provided by creditors. It has maturity date, which means that creditors want their money back on the certain date. Also, they want to get interest as a remuneration for the period when the financing was provided to the business. Since there are two categories of the financing by which the assets are being financed, it leads to the following conclusion. Total value of assets equals to the total value of equity plus total value of liabilities. This is an accounting equation. Assets equals equity plus liabilities. On the left side of the equation, there are assets. And on the right side of the equation, there is a structure of financing means. It shows equity and liabilities, which do indicate how the business finances its assets. Assets are financed either by money provided by the owners of the business, or by liabilities, which represent money provided by creditors. Each transaction has a twofold impact on the accounting equation. An example can be an increase in assets. If there is an increase in assets, in order to have an equation, on the right side of the equation there should be an increase in either equity or liabilities, or both of them. Such rule leads to the equation between assets and sum of equity and liabilities. It also reflects a change in the structure of the financing means. Some practical examples can be as follows. An establishment of the business and investment of cash into the business, which is provided by the shareholders. Another example, business gets a loan from the bank in the form of cash. In both these examples, there will be an increase in assets on the left side of the equation. On the right side of the equation in the first example, when cash is provided by the shareholders, there will be an increase in equity. In the second example, when cash is provided by the creditors, in the form of the loan, there will be an increase in liabilities.
Another example, how business transactions impact the accounting equation, is a decrease in assets and decrease in equity or liabilities, or both of them. Practical example can be as follows. One example is a repayment of the loan to the bank. Another example is a return of the money invested to the shareholders. In both these examples, assets will decrease, which will be reflected on the left side of the accounting equation. On the right side of the accounting equation, there will be a decrease in equity or liabilities, depending on whether equity or liabilities are decreasing. After the reflection of this transaction, there will still be an equation between total value of assets and sum of liabilities and equity. Also, it can happen that a particular transaction has a twofold impact on the accounting equation. However, only one side of the equation is impacted. For example, there might be an increase in one category of the assets, and at the same time, there is a decrease in another category of the assets. This means that there is an exchange between different types of assets. One type of the assets is being exchanged into another type of the assets. For example, inventory is acquired for cash. In such case, the business gets more inventory and less cash. There is no change on the right side of the accounting equation, since financing structure has not changed. Only left side of the accounting equation is impacted by the exchange between different types of assets.
Another example is an increase in one type of equity and decrease in another type of equity. Such transaction will impact only the right side of the accounting equation and only equity part. The practical example, which is quite rare, can be as follows. Accumulated profit is converted into the share capital. The owners of the business can decide that the accumulated profit should not be distributed to the shareholders in the form of dividends, but to be used to increase share capital. In such case, the investors will get additional shares instead of dividends. There will be a decrease in the accumulated profit and increase in the share capital. Both are under equity part on the right side of the accounting equation.
Another example, when transaction impacts only one side of the accounting equation, is the exchanging of one type of liabilities into another type of liabilities. In practice, it happens quite rare. For example, the business can agree with one creditor to take over the liability from another creditor. For example, if the business has an agreement with one bank for a short-term loan, there might be an agreement with another bank to refinance that short-term loan and provide long-term loan. This would mean that on the accounting equation, there will be an increase in long-term financing and decrease in short-term financing. Both are under the right side of the equation, under liabilities part.
Another example is a decrease in equity and increase in liabilities. This is quite rare case. For example, there might be a decrease in share capital, and the business can get a loan from the bank to repay money back to investors. Another example is contrary to the previous one. There is a decrease in liability and increase in equity. This is not again very often case, which happens in practice. For example, there might be an agreement with the creditor to convert liability to the share capital. The creditor will get shares of the business in exchange to liability of the business to this creditor. The impact of such transaction on the accounting equation will be an increase in equity and decrease in liabilities. Both are on the right side of the equation. Let's explore how to reflect impact of transactions on the accounting equation. Let's assume that the new business is established and shareholders invested $5,000 in cash. In addition, a loan from the bank was taken in the amount of $1,000. Here is how this transaction will impact the accounting equation. On the left side, there is an increase in assets, cash caption, by $6,000. This cash was provided to the business in the following forms of financing. $5,000 invested by shareholders as share capital. This is reflected on the right side of the equation as an increase in equity, share capital caption, by $5,000. $1,000 was provided by the creditors as a loan. On the right side of the equation, there is an increase in liabilities, loans caption, by $1,000. After the impact of the transaction is reflected in the accounting equation, total value of assets, equity, and liabilities has to be calculated. Total value of assets is $6,000. Total value of equity is $5,000. Total value of liabilities is $1,000. After this is done, total value of assets on the left side of the equation, and sum of equity and liabilities on the right side of the equation must be calculated.
This is to make sure whether the impact of the transaction on the accounting equation was properly reflected. We get total value of assets equal to $6,000. and sum of equity and liabilities equal to $6,000. We have an equation, therefore the impact of the analysis of the transaction on the accounting equation was reflected properly. Thank you for watching. Do not miss our new videos. Make sure you subscribe to our YouTube channel right now. Just click subscribe button below this video.
Let us know what kind of videos you like more. Practical problems or theory explanation. Please leave your comment below the video. Thank you for your comment.